Hi everyone, Frederick here, Simple System Trading. Today in a new case study. It was sent to me by John, one of my clients, SST user. He sent me this chart book. He's kind enough for me to use it on this video, and I will walk you through it. I prepared the short conditions, the long conditions, and the signal, and I'll walk you through what he sent me and how I constructed this. So let's take in the notes and also tell you that this is an example. It's not something you would just turn on and be profitable. You have to read the risk disclaimer and do your own due diligence and assess your own risk. This is purely to demonstrate the tools. The tools are there. You have to use them your own way. So John sent me this chart book. There's 3 charts in here, a 5-minute chart, 10-second chart, and a 1000 volume chart. It's got a few studies on them as well. And we're going to use them to construct the signal. The signal we will use with the SST AT, the Autotrader study. The signal builder study, I'm going to use that one. It's part of the AT bundle as well. And if the signals are constructed, we will also have a look at entering multiple orders around a certain price, because that's basically what the trade entry rules indicate here. So we have, for every system basically, you have to ask yourself a few things. What are my rules to the signal? So what needs to be there to actually enter a trade? And it's not always black and white, so you might not want to take it fully automated, but you could use this same construction to do a semi-automated trading setup. But ask yourself what needs to be in that signal, what kind of rules apply. And we have 4 today, so I'm going to use that to construct the signal. And the second thing you need to ask yourself is, what does my trade entry look like? You know, when that signal happens, what kind of order do I want to place, at what price, what order type, how long do I want to keep it there, stuff like that. Where will my targets be, where will my stop be, and how, on the last point, how is this all managed? Do you want to trail things? Do you want to move to break even? Do you want to follow a moving average or the VWAP or whatever as a gauge for your stop management or your target management? You can also choose to do it manually, so that's also possible. So those are the 3 things you need to go through to test your trade idea and not be stuck with trades you don't know what to do with. So it's pretty detailed, but with my tools you can actually quite quickly investigate a few trade ideas. So what we have here, I just got the short rules and I made the long rules. I will just go through the short rules and a short trade example. You can take a look at the chart book yourself for the long side of things. Okay, I'm going to push this this aside right now, and let's have a look at the different charts here. So we have the 5-minute chart, which is right here. We have the 10-second, which will be our trading chart, and that's why I use the conditioning and the signaling on this chart. And this is a higher time frame, a 1000 volume chart that was sent, that was used for a signal condition as well. So first thing, the first rule, the ask bid volume difference bar from which chart was that? Hold on a second. Yeah, the chart number 3, the ask bid volume difference bars is a study right here. And if you look at that, it's basically no inputs. It's just a candlestick bar thing with an open, high, low, and close as the subgraphs, right? The condition here is that that study has two positive bars, so two consecutive positive bars as the short condition. So I took a color bar based on alert condition study. It's the go-to study for your conditions. Just name it again. Don't use any coloring this time. And I'm going to look at this alert condition here. So what this basically does is we are looking for the current bar and the previous bar. The -1 is the previous. And in this case, it's ID3, that's the ask bid volume difference bars. And SG4 is the close. SG1 is the open. So we had open, high, low, close as SG1, 2, and 3. So the close is greater than the open. That makes a green bar. And this is the same, the close greater than the open for the previous bar. Very simple condition. We have two bars right here that are green. If you look at the tool values window here, you see that short condition. We hover over it. This is a 1, right? You have a condition true. Two bars green. Here it's not true. Here it's true. Okay, so that's the first condition we had. And then we have the second condition on the 5-minute chart. There was a condition that the last price is higher than the high of the last bar. It's also pretty simple. That's the short condition here. And price bars is fairly easy. It's just this one. So the last price, that's the C of close, is greater than the previous high, bar high. So that's there. That's the short condition. And the third rule is on the 5-minute chart, the current bar has more than 1.5 minutes, so 90 seconds left. So there has to be more than 90 seconds in that bar left to be used. So we use the countdown timer for that. Countdown timer, I've added 2 because there was one has to be visual and another one I want to use in this format where you say display value is yes, and then this little subgraph here will be populated with seconds, number of seconds. So that's what we're going to use here in the color bar based on alert condition. We called it time condition, and this time condition is true when ID1, SG1, so the countdown timer subgraph, has more than 90 seconds. So that's the timing rule on the 5-minute. And then we have another little rule in the 10-second chart, and that's based on a volume spike, a delta spike. And in the example, I'll give it back here, little notes, and you can play around with those rules. If it gets too complicated, it's probably easier to have a custom study made, but with simple alert condition you can do quite a few things. But you want to have a look at the delta twice the size of any previous 4 to 6 bars. So let's have a look at that. And I did 4 in this occasion. Let me see, short condition, the bi delta, that's what. The bi delta, again, you name it something logical, set this to ignore again, and we construct that alert condition. It's an AND statement, and I'm basically looking at, again, it's open, high, low, close. So this is the ask bid volume difference bar. Again, SG4 is the close. The close is greater than 2 times the previous close, right? That's how I did it. And I basically want to have it greater than previous 4 bar closes. And I also say that the close of the previous bar has to be equal or greater than 0. So I don't want any red bars to be counted. But you can adjust your rules a bit to adjust to what you think is a spike. But I made it this little rule for the buy delta spike. So that would mean that right here you see a big bar that's greater than the previous ones, and it's greater than all the previous 4, and the previous 2 are green. So that's kind of the dissemination. You can go way beyond those rules with simple alert conditions and construct it differently, but that's what I used here. So here you see again a big bar. It's at least twice as big as any of the previous ones. So that's what we used. So with those rules, basically have short conditions lined up, and I'm using that multi-time frame signal builder that's in the SST AT bundle. So in the short conditions, I basically just set them to yes and select all the short conditions on the different charts that I just constructed. And I went to the subgraphs, and because they're short, I want to see them as red, and it's just a little personal thing. You can set any color you want. And I named the subgraphs, so I named them so we know what is what. The subgraph values of these this study, they are still ones. So we come to that in the construction of the actual signal. So those are short conditions taken from the different charts and different studies and alert conditions. I did the same for long, so that's the same construction, and I made the long conditions multi-time frame one. And then for constructing the actual signal study, for shorts we need to get a -1. We know that. The SST will take in a -1. Now we first name it, we ignore the subgraph, and we're going to construct the alert condition where the short should happen. Simple alert condition based off the short condition study, so ID4. And all those subgraphs we've used 2, 3, 4, and 5 in this one. Whenever that subgraph value is a 1, so all of them, then we have a true signal. And since we construct a short signal, we're going to set the custom value. So output when condition true, use custom value, and set that custom value to -1. It's a little bit easier than in my first blog post almost more than a year ago, but the color bar based on alert condition was modified by ShareAchart, which is good, and it's way easier now to construct that by -1. So that's the -1 constructed from the short conditions. I did the same for long signal based, and then we don't need to do that thing here, and based off ID6, which is the long conditions MTF. Okay, so you can review that yourself, maybe adjust your rules a little bit and test things out. So this is basically the setup. One-time load of a chart book will not always be indicative for the actual signal. You will need to do a little replay of that. Depends how you interact with your multi-time frame setup, but and what conditions. But in this case, it's like that. I know there's a condition here, so we're just gonna start a little chart replay. Right here, let's do a little standard old charts in the chart book, and let it run. They changed the replay thing a little bit recently, because you would have to press play again before it actually starts. So now it's starting a little replay, and you will see that the multi-time frame conditions are populated. I have to run you through, so I'll pause it a little bit, run you through the SST AT settings here. The trade setup is fairly simple. Just one sec. It's fairly simple, as we are going to enter. We're going to enter a short at the market, at the short signal, and we want to place a second and a third order above the current price. That's basically what was asked. And there is a nice feature in the SST AT that will allow you to do that. So I didn't change anything here. I went to the spread entry option. Spread entry, it's basically you enter around a certain dedicated price with more than one order. And that's what you can do with this option. So the first has to be a market order. The other two are limit orders. So I select that. There's more options here, but I added this. First market, rest limit. So when the signal happens, the first order is a market order and the other two are limit orders. These orders will be placed individually, managed individually, but have the same characteristics as all the orders have the same characteristics. So whatever you choose to be your target, that will be the same setting for every order that's entered. So in this case, we're going to place them 6 ticks apart. So we have one 6 ticks above and the other 12 ticks above. And we have 3 orders in total. If you're going to use spread orders here, we have to make sure that the maximum allowed position size is adjusted. In this case, 3. We're going to add 3 orders with the size of 1. 1 target, 3 orders. Maximum position size is 3. So that's how I set it. I set the long signal and the short signal study. We're going to evaluate at bar close to enter the trade. The order entry type, we already set it to first is a market and the other one are limit. For the limit order, you can set the actual price here. And what we just did is the open of the entry bar. So that's the current price at the moment the market order hits. So we'll leave that as is. What you need to keep in account is if you're going to spread entry order 6 ticks apart, that you have to take into account if you use your stop to set your stop wide enough to make sense, right? Because if you place a 6 tick stop, you will basically have your first order in and the second order is not part of that trade package because you will be out of your first order, stopped out before the price hits your second order. You can do it if that's your trade objective, but I think in this case we want to spread your entry out over multiple prices and get the best price, average price, and then hope for the trade to move in your direction. So in this case I set the stop to be 16 ticks. What you likely want to use as well in this case is scaling in. So you scale into your position. You can set that all the way up here, scaling in, but we'll do that in the second run of this example. What else did I set? The first target, I set a fixed target of 10 ticks. It's a demo thing, but you can set anything you want, and every order will be individually managed by the trading study. So let's see how this works out for this particular case. So we're going to run that little replay, and now there will be a trade here. So speed it up a little bit. to get that trade entry. There we go. You see this is a little bit in the way. We can it's a drawing you can actually manipulate a bit. You can move it, and now we can see what type of orders were issued. We have that bar close here with the signal. We enter one at the market, and there's a second one here waiting, sell limit order, and another one waiting 12 ticks out with the attached orders. So you have your first one as a target here. This is the second target, and this is the third target. So this is the way the spread ordering works. So you have your entry price with the other ones, including the attached orders. So you can see we play again how this works out. We get the second fill right there. This will basically run until either the targets are filled or the stops are filled, right? In this case, we have first target hit, second target is hit. I'll pause it. What will happen right now? We didn't identify any rules to cancel the trade because we said we will manage the stops and the targets manually. We'll likely manage the open order manually as well. But if you do not do anything, this will, either get filled or it won't. And if it doesn't get filled, then at the end of the day it will get cancelled, as we have the order on set to a day duration. So you need to be aware of this case that orders are not always filled, and you need to make up your mind what you want to do with it. In the SST AT, there's a few settings you could apply. That is the order cancellation setting. Find it real quick. Ooh, there's so many settings. Here, order cancellation. Set to never cancel, but you can cancel based on time, based on number of bars, based on movement, or based on some kind of alert condition triggering the cancel. So that's something you could do as well. So keep that as is, and this is basically showing you how this works. So if you further play this, well, this one will not get filled anytime soon, and I will just decide to cancel it, and that's it. Then we wait for the next one, right? So the next thing I want to show you is how that scaling in works. So we'll skip this little session and let it come back here, and we go back to that little period where we were. Let me see if we can find it. There we are here. By the way, if you want to see the trade fills, you have to set that here. Let's do this same thing. We know we're going to get a signal, which is good. See the difference. So we are playing. Is it scaling in with the right click here? So we are using scaling in. There we go. We have a first fill. You see there is only one target and there is only one stop. See that? This one and this one. The two other entries are inside those brackets, so they're fine. And whenever the second one gets filled, you will see the quantity of the target and the quantity of the stop being adjusted. And this way, with scaling in, you have one target, one stop. So we'll see that right now. We get that second fill. You see the target and the stop is as it is. So that's that. And this will go to the intended target. There we go. What we also see is that the other open order is now removed. Let's take a look at the message log here. And what it says, scaling and safety feature, there was an order waiting without brackets. The order is now cancelled. So the AT will also take care of not having any stale orders waiting. Also, if you set to use a stop order, and I think we all do, and the AT will detect it if the stop order for some whatever reason is no longer there, it will flatten your position. So that's also a built-in safety feature. So that's about it. That's the demo. That's the run through on this use case. I hope you like it. And if you have another example you wish to go through, then hit me up. Thank you for your attention. Have a good one. Bye-bye.